Hey, what's going on everyone? Welcome to the channel all about real estate. My name is Lewis, and in today's video, we're going to take a look at mortgage rates and give you an update on where they are today. They have actually just hit their highest level in 9 months, but to put things into context, it's still not much higher than it was even a week ago or even 2 months ago when we saw rates at record lows. So we're going to go over that in a little bit of detail. We'll take a look at the 10-year Treasury yield. We'll look at where mortgage rates are. It is still an excellent time to secure 30-year fixed rate debt. So we'll go over all the details in this video. If you are new to the channel, please hit that like button, hit that subscribe button, and let's begin. Up on the screen, I have an article from Mortgage News Daily, and it says that mortgage rates are now the highest that they have been in 9 months. But when you unpack this article and you look at some of the highlights I have here up on the screen, it says that the silver lining was that the past few months had seen a very narrow range, with rates finally just barely breaking the previous highs. In other words, mortgage rates, they've been bouncing up and down in a fairly narrow, tight range. Even when we saw the lows of the last few months, they weren't too much lower than the high that we're seeing here today. And now the author of this article goes on to say that this is one of the things that they warned about Friday, whereby rates would not need to move too much higher in order to claim the 9-month highs. So in order to provide some context, what does this really mean for you if you're out there looking to purchase or refinance? Well, basically what it means is that they're not insanely higher than anything that we saw last week. In fact, from the lowest mortgage rates that we saw 2 months ago, we're only up about 0.25%. All right, next thing up on the screen, I have the 10-year Treasury yield. And for those who don't know, the mortgage rates tend to track the 10-year Treasury yield in almost lockstep fashion, meaning if the yield goes up, rates rise. If the yield goes down, rates typically go down. As of today, we are sitting at 1.637%. It's up about 0.139% on the day. And you can see that the trend over the last month and a half or so has been steadily going up. That is contributing obviously to the rising 30-year fixed mortgage rates today. Now that we've provided you a little bit of context with regards to where the mortgage rates are over the last 9 months and where the 10-year Treasury yield is sitting, let's actually take a look at the 30-year fixed mortgage rate as well as the 15-year fixed, so we can kind of see where we are today. Now, up on the screen, I have the Freddie Mac website that shows the mortgage rates as of 12/30/2021. So they're not updated for this week yet. This is just the end of last week, but it's the most recent update that they have. Now, what's interesting about this is we've obviously seen the rates come up a little bit, but it breaks it down here into a couple different categories. We have the 30-year fixed here up at the top, with the average 30-year fixed rate sitting at 3.11%. And that rate on average comes with 0.7% in points in fees in order to secure. And what does that mean exactly? What that means is that in order to secure a mortgage, there are certain costs associated with the transaction. So generally, you'll have some lender fees, you'll have title and escrow fees, you'll have to set up your taxes and insurance, and then you'll have any points associated with buying down the interest rate. And so when you're looking at a rate sheet or you're consulting your mortgage professional, you can go and take a lower interest rate, but that interest rate generally comes at a cost. As you go up higher in interest rates, they generally come with a credit. So I would assume what they are quoting here is the average structure as far as points and fees go. And so that is sitting at just under about 1% of your total loan amount. That, of course, those points and fees is a percentage of your loan amount. As an example, if you had a $300,000 loan with 0.7 in points, that you're looking at roughly $2,500 in fees. That's just a rough estimate without actually using a calculator. So that's where the 30-year is. The 15-year today is sitting at about 2.33%, and that's with the same point and fee structure as the 30-year fixed. And then it does go over the 5/1 ARM. For those of you who don't know, a 5/1 ARM, it is an adjustable rate mortgage. It's fixed for the first 5 years, and then it adjusts annually every 1 year after that, depending on where the interest rates move. And that's typically based on a 30-year amortization schedule. So you can see that it's, let's see, about 0.6% lower than the 30-year fixed rate. Points and fees are a little bit less, but of course that is only fixed for a 5-year period. Then it can adjust based on the market after that. With rates at all-time record lows, this is not something I personally am very interested in, even though the interest rate is lower. But my concern would be what happens after the next 5 years and then rates adjust. And so far, we've seen a lot of forecasters talking about where the interest rates are going to be headed even this year and moving into the future. So if rates trend up from here, these adjustable rate mortgages could be an issue moving forward. Okay, so now that you have a good idea on where mortgage rates are on average, couple things that I want to leave you with. First and foremost, if you are going to be working with a mortgage professional or a mortgage broker, ask them about different rates, different programs, different fee structures, and make sure that you find the best option for yourself. Personal finance is personal, so it's really important to take those steps. If you don't understand something, ask questions. And then not every rate is created equal. Sometimes the lower the rate, the higher the fees, means your payback or your break-even point takes several years. And in some cases, that doesn't always make sense. So drill into those numbers, work with your mortgage professional, make sure that it makes sense for you and your personal situation. The second thing that I want to leave you with is that even though we're sitting at mortgage rates at 9-month highs, that doesn't mean that they are bad today. It just means that they're up slightly from where they were a couple months ago. And so the 30-year fixed on average sitting at about 3.1% with a reasonable fee structure, that is still incredibly low. If you look at the historic average of mortgage rates over the last 30, 40, 50 years, they are lower than they have ever been. So it's still a great time to consider refinancing. If you haven't done so already, just make sure that the benefit is there and it makes sense for you. It's still a great time to purchase and secure that fixed rate debt. Notice I said fixed rate debt. The adjustable rate mortgages to me are a little bit scary. It has to work for your personal situation, but for me personally, knowing that after 5 years, the rate can adjust, that would not allow me to sleep very well at night, especially with rates still at all-time record lows. So anyway, I hope you found value in this video. If you do, consider hitting that subscribe, hitting that like button, and sharing this with your friends. We'll see you on the next video. Thank you.